on?
What's up, disciplined investor?
We got Benzinga CEO Jason Raznick here with us.
The man, the myth, the legend, Tom Nash.
Peter Schiff on the Power Hour with us live today. Interesting, different, unique, innovative companies. Mia, you are live with us on the Power Hour. What's up?
Thank you so much for inviting me on.
Jessica Billingsley, that is the CEO of Akerna. The best trade idea resource out there.
Yo, what is up, everybody? Happy Monday. You know what that means. The stock market is back open. Of course, you could have been trading over the weekend if you were trading, crypto, right, Spencer?
Or futures.
Futures, crypto. There's some things you can trade over the weekend, but
yeah.
I try to stick to crypto on the weekends. I don't like, I caught some of Ninja Trader earlier talking about futures. I need to get more into that. Well, I don't know if I need to, but I if I want to, I need to learn some more about it. But crypto is always fun to just scalp over the weekend.
Tell us what you scalped over the weekend in crypto. Here's a heat map of today.
I actually sold some of my Ethereum.
Whoa, wait! You are not allowed. I thought selling is definitely against the rules.
No, actually, that's a common misconception. As a crypto trader, you are more than welcome to not just buy, but sell as well. So I had some with earnings this week in a lot of big companies. I just wanted to free up some cash in my Robinhood so that I can trade some of these earnings plays. And Ethereum had been ripping. I was up nicely on my Ethereum trade. So I was just freeing up some cash. It wasn't anything like, I think Ethereum's going to drop from here. I just was up in the green and sold some. But
look at it, AB doing some asset allocation. AB,
yeah, I know it's not what we're used to.
I've actually never sold cryptocurrency. I've only ever bought when I was going through my my taxes and stuff, right? Back for tax season, there was a section on there for cryptocurrency, and I was like, never sold, unrealized gains next. And I just kept on going because I've never actually sold a crypto before. I've only ever bought. So anyway, Bitcoin in the green today, AB. I have a hunch this has to do with the Bitcoin ETF that is supposed to open tomorrow, the Bitcoin futures ETF from ProShares. We got word of that sort of mid to late last week. So that's going to happen this week, which is exciting, which is fun. And the rest of this doesn't jump out to me. Dogecoin actually being up almost 9% does jump out. That's interesting.
Patrick Starr is asking a good question in the chat. Did Neil join Squid Game? He's been gone for a while. So we to preview the show. So here in a minute, we're going to bring on Ed Lavery, the Director of Investor Intelligence at SimilarWeb. So SimilarWeb curates data from a bunch of different websites and companies. And what's really interesting is that not only for us at Benzinga, we can use this data, for our company to dissect our traffic, et cetera. But for investors, we can use this is in the realm of alternative data that investors can use to try to gauge, how strong a company looks or appears. So we're going to have Ed on to talk about Netflix, who reports earnings tomorrow afternoon after market. Let us know in the chat. Have you guys watched or seen Squid Game yet? Drop a 1 if you have, drop a 2 if you haven't. Spencer, have you checked it out yet?
No, you know what? I've been stuck in a COVID quarantine for 2 weeks now. And
that seems like the perfect time to watch some
Squid Game.
What?
You would think so, wouldn't you? And yet I have not yet watched Squid Game. So I need to get up on the culture clearly. But before we transition all the way out into that and out of crypto, I just want to remind everyone that you can get $50 in Bitcoin for free, FREE. That spells free. All you have to do is download the Voyager app. Use the offer code ZING, Z-I-N-G, fund your account with $100, make your first trade, and they will give you $50 for free using that code. So I've not seen Squid Game. I know Netflix came out with a number. They said Squid Game is going to account for about $900 million in, I forget, it was like a made up metric, right? That they came up. Maybe Ed knows more about this, so we could talk about it with Ed. But it's basically the metric that Netflix came up with to like derive value of their shows. And they said Squid Game is going to be worth to them not about $900 million between show and the merchandise and the search engine searches and all this stuff. So on that note, Ed probably knows more about this. So okay, let's bring on Ed from SimilarWeb.
All right. Ed,
Hey.
how we doing? How we doing on this beautiful Monday?
Fantastic. Great to be on the show again.
Have you seen Squid Game?
I have. I actually just finished the series last night. So it's very, very good. And I'm glad I finished it. But it was it's hard work getting through. on edge of your seat.
Is Squid Game going to be worth $900 million to Netflix?
That exact number I can't actually ascribe to it, but I can.
No one can. That's the catch.
I know. Well, they've got to put a value somehow, right? No, but we definitely have seen an uptick in the number of subscribers coming through on Netflix, Squid Game as well.
All right. So in all seriousness here, sorry, Avi. In all seriousness, we have Netflix earnings tomorrow. So it would behoove us to get a sense for what your data is saying of Netflix heading into this report from last quarter.
Sure.
Yeah.
Sure. So I think maybe it would just be worthwhile just kind of giving a bit of background on our data, first of all, before we kind of dive into Netflix. So at SimilarWeb, we provide web traffic estimation data for virtually every single website in the world. So not only can we track the number of people who are visiting a website, we have estimates of how many people are visiting particular pages on a website. So one of the things that we can actually see with our data or estimate with our data is the number of people who are visiting a sign-up page on Netflix, so the number of new subscribers, and also the number of people who visit the cancellation page on Netflix.com and therefore canceling the contract. So we can get a proxy of actually net ads on Netflix, not only in the US, but in 50 other countries. So we can get a global view on subscriber growth in pretty much near real time. We have a 1 day lag or 1 or 2 day lag. So we have an early read into the direction of Netflix's performance overall. So I guess like with that in mind, what have we been seeing with this data? So look, I think one of the key things that we've actually seen is that from September, when Squid Game was launched, we saw actually a very big growth in the number of new subscribers, particularly in EMEA, so Europe, and APAC, so Asia as well. So really the first half of the year for Netflix was, as you guys well know, very difficult to produce content as everyone was stuck at home, particularly where I was at the beginning of the year, which is in Europe, less so over here in America. But yeah, so there has been really a deficit in production of content in the past, last year in particular. And what we're actually now beginning to see with some of these big hits like Squid Game, also Seinfeld coming on, that the rate of cancellations is slowing down somewhat. And actually on a global level, signups are increasing. And that has been accelerated in the last month.
So Ed, we do have the data presentation up here on the screen. So something I'm curious about is how, because I imagine that SimilarWeb in the investor intelligence department, you guys aren't going out and curating this data and making a presentation for every single company that has earnings. So how is that decision made to go ahead and go out and curate this data specifically for Netflix?
So, well, first of all, we know Netflix is one of our kind of a hit stocks with investors as well. The key bit of data that we have on Netflix is their international sign-up data, international sign-up and cancellation data. That data isn't really available in many other places. I think the other kind of key part of the quality of our data for Netflix is that, I don't know if you know this, but you can actually only cancel a Netflix subscription by going on the website for Netflix. You can't actually cancel it on an app or a television. You can sign up for Netflix on an app or a television, but you can only cancel it on a desktop site.
I did not know that. Wait, I did not know that. AB, did you know that?
No, but I think there are other websites like that if you want to cancel, your thing, you have to go to the web. I've had that happen before where I try to cancel something in an app and then they're like, you got to go to this website. So it makes sense. But no, that is good intel because Ed, as you said, I mean, then you have a really good gauge of how many people are visiting this cancellation page versus maybe not being able to see how many people are signing up through the app.
100%. So we've got some very good visibility on this as well. And look, the other key thing that we have noted on Netflix as well. So we actually did a report with Business Insider about a year or so ago on Netflix. Maybe a bit longer than a year ago. It might have been about 18 months ago, before the pandemic. We spotted prematurely a slowdown in international signups. Basically, when we went live with the article, it actually impacted the share price of Netflix. So the share price went down 2%. So we actually know Netflix is quite heavily traded based on our data. So the stock price of Netflix does move on our data.
And then so Ed, I mean, something interesting too that I want to ask about is kind of, we use, obviously as investors, we use a lot of data to try to help us make decisions. But a lot of times that data is, kind of they're lagging indicators. We're looking at stuff in the past. Would you say this form of alternative data is something that can be kind of a leading indicator?
Yes, I would. Yes and no in a certain sense. I mean, it is a leading indicator in the sense that you're getting a read before financial reports are reported, but financial reports are reported after the quarter, right? So everything that's already everything that's already happened in Q3 has happened. And we've been tracking that data, as I said, pretty much in real time. So with the whole quarter before the financial results are actually published, we have the full quarter's data. So I guess in more traditional terms, you could call that a leading indicator. But actually, in the terms of the data industry, it's data that's already happened, essentially. So it's there's a term, I don't know if you've heard used before, called nowcasting. So it's basically getting visibility into businesses in the actual present as well. I guess some of the leading indicator metrics that we do have on top of this that you could understand, like kind of forward performance, will be things like engagement. So can you actually see things like engagement on Netflix improving, which is one of the things that we have been doing. And you can use engagement as a proxy to understand the likelihood of someone being canceling or potentially new people signing up as well.
So Ed, if we can think back to Netflix the last couple of times around, last quarter, well, maybe 2 quarters ago, they had that really big miss on their subscribers, right? They missed massively. Last quarter, they saw a big decline, but the decline was actually like not as bad as it's all about expectations, right? And the decline was not as bad, even though it was a decline. So what are the tea leaves? What is your data telling you about what Netflix might say tomorrow with regards to the prior quarter about their subscriber growth? Are we in line to coming well above the number, below the number?
So I don't want to make a call on whether it's going to be a beat or miss, purely because we are a data provider and we're not providing any kind of financial advice. And it would be wrong of us to come up with an indicator that would say there is a beat or miss. What our data is showing is those inflection points as well. So what our data is suggesting is that subscribers are increasing, cancellations are relatively flat. It's looking positive for Netflix. I wouldn't want to put a number on how positive it is for Netflix.
And again, just to be clear, you're saying not in the now. This is the last quarter, right?
Exactly.
Okay.
So the data is looking good. I mean, look, this would also be a big flag if subscribers were decreasing and Netflix was saying to the market, if our estimation on subscribers was decreasing and Netflix was saying to the market, there's going to be subscriber growth. This will be an early indicator. The opposite's happened. So I guess the way to read this is that it's looking positive. This can provide more confidence in understanding the direction of what Netflix is going to be in performing.
Because they'll probably talk about Squid Game tomorrow, but Squid Game is wholly irrelevant to the numbers from last quarter. What I'm just curious about, Ed, regards to the U.S. versus international. For years, for the last 3 or 4 years, Netflix has been trying to convince the market, like, hey, forget the U.S. Look over here, international growth. So I see the chart up on the screen there, the international quarterly net adds there on the right, and it's the same thing as far as the U.S. is concerned, where it's skewing positive.
So the U.S. is relatively flat.
Okay.
From our data, dipping a little bit, not relatively negligible. I mean, look, I'd say in the US, Netflix is pretty saturated as a market, and there's a big opportunity internationally. I think one of Netflix's key strategies is to start producing international content, which I think Squid Game is a perfect example of this. There's been a few other shows this year which have just evaded my mind for the second. But I think it is the growth area international. It is where we are actually seeing strong movement as well. And they are definitely performing in that.
So Ed, we've got the data pulled up on the screen. I mean, I want to just kind of give the floor to you, see if there's anything in this report that, you know, we haven't touched on yet that you think is particularly interesting. You know, I have my own kind of, because I could see it both ways, right? I could see Netflix saying, you know, we expect where they're giving guidance for future, saying this is a great stepping stone. We're going to be able to use Squid Game and these other international shows to further our foothold in the international market. Or they could also say, you know, we can't expect a Squid Game like success every single quarter, you know. So I'm more curious about the guidance, which of course, you know, it's hard to predict the guidance with data. But is there anything else in this report that you think is particularly interesting for investors?
So I would say the real growth, I think to your point, is that as a result of Squid Game only really happened in September. And I think, as you pointed out earlier, that like a lot of that impact might not be really shown fully in the numbers for Q3. I think a lot of the positive impact for these big shows, particularly if they're going to be releasing them, probably is better at the beginning of a quarter, so that number can trickle up like throughout the quarter and be reported in the end. So I think that's something also to watch out for going further forward, that these big hit shows, if released towards the end of the quarter, might not actually have the full impact until the subsequent quarter, which I think is what we're probably going to see with Squid Game here.
Yeah, I mean, one thing that I think is so fascinating about the Squid Game and how popular it's been in the numbers is it's beating out all these series like Tiger King, Queen's Gambit, Bridgerton that came out kind of in the midst of COVID when everyone really had nothing to do besides sit at home and watch Netflix. And now, you know, we're more reopened, things are going on, and the numbers still crushed all those previous shows.
Well, and I guess the thing is, when everyone's now out and about, you talk to people as well a lot more. So I definitely know, like, I might have been watching these shows at home last year, but I wasn't really speaking to many people. And like now you go out, you meet your friends, you go out in the office as well. Everyone's talking about the same things. So you just hear about things a lot more as well.
Yeah, we've definitely been having some conversations in the office about Squid Game, and the people that haven't seen it, maybe they don't have a Netflix account, you know, feel left out of those conversations and they want to go home and sign up and watch it. So we definitely see that phenomenon. But
wait, I have one last question for Ed, and it's not pertaining to last quarter at all, but you know, Netflix has been in the news for a lot of reasons. One of them being comments made by Dave Chappelle, which has gotten some criticism. This is not the first time, nor will I'm sure will it be the last time that someone on Netflix says something that upsets people. I'm wondering if in the past, if you've seen, if there's a correlation necessarily between like headlines and like anger on the internet versus like, does that show up in your data at all or not really?
Yes. So about a year ago, if you remember, there was that French show on Netflix. I can't remember the name of that French
Cuties.
show. Cuties. That was the name of the show. It was Cuties.
Okay. Yes.
Very much flagged.
Yes. Okay. Yes. I'm with you.
Yeah. So it was very much flagged for being, I guess, materially inappropriate in how they kind of showcased, I guess, young girls. We did, and there was a hashtag which was like cancel Netflix or something like that. So we did actually see a spike in cancellations for Netflix then. However, it really was not material. It lasted a couple of days, the spike, but had no real material impact on the overall numbers for Netflix.
That's what I thought.
I remember people thinking like, oh, I'm going to buy puts on Netflix. This is going to cause a bunch of people to go out and cancel and the stock to crash. And it might have dipped like 1% one day. And then the next day it was up 5%. And it was like, yep, that's, you know, that's what happens.
I think one thing to be cautious of when you looking at like social media data and sentiment data, sometimes there's just a lot of noise without much substance in it as well. So things can appear much more blown up or storm in a teacup than they actually are.
Great. Yeah, storm in a teacup. Ooh.
There you go. That's your English guy for you.
Storm in a teacup. I'm going to start using that.
So Ed, before we let you go, are there any other, company, we have a lot of big earnings coming out the next three weeks or so. Are there any other companies that you think SimilarWeb will have some interesting reports on that we can get you back on maybe ahead of Facebook's earnings or something like that?
Sure. So we'll be looking at the social media companies like Twitter coming forward. Also, Peloton's a big one, and Chewy. And we will hopefully have many more than that as well.
Ooh, Chewy would be a good one to get some of the SimilarWeb data on because it's like 100% e-commerce. So you'd see every site that people are visiting, checkout pages and all that. So we'll look at the earnings schedule. I'll reach out back to you, Ed, and we'll see when we can get you on again for a nice little earnings preview. I think this has been very informative, and we're all now even more excited to watch Netflix earnings call tomorrow afternoon.
Likewise.
Thanks
Fantastic.
a lot,
well,
Ed.
thank you very much for having me in the show.
Thanks a lot,
All
Ed.
right. Thank you.
All right. Okay, AB, we're going to have Matt Hammond on from IPO Warriors in 7 minutes to preview the week in IPO land. In the meantime, there are a couple other things. Let's see what the chat's focused on.
I also want to ask the chat for some feedback from that segment because this is something we might be trying to do more and more as I kind of asked Ed if he wanted to come back on for different companies. If you think looking at some of that data is interesting, informative, let us know in the chat. If you didn't care for it, let us know as well, because we do want to take some feedback from the chat as we're trying new segments, new guests.
We are always looking for recurring segments. If you like that, throw one out there. And like if you liked it enough for us to do like a recurring segment, throw one out there. If you liked it but don't know if you need a recurring segment, especially during earnings season, maybe throw out a 2. If you think once was fine. If you hate Ed, you never want to see Ed again, throw a 3 up there. Just curious. Speaking of Mark Zuckerberg, who's in the chat right now, I don't know if you saw Facebook today, AB, but it is having a very good day. Is Facebook the number one performing stock in the S&P 500 right now today? Let's find out. Is that the case?
It could be. I mean, up almost 3.5%.
It's not. But I thought it looked like it for a minute there.
It might be the best performing FANG stock.
It is. It is the third best performing technology stock today. Facebook is. Can we get a chart up there?
Yeah.
One of yours, because I'm doing this from my janky setup. Mark, why are you pumping? Mark in the chat, man. Mark Z. Why are you pumping Facebook? What's going on here? I don't know what's there probably is. There's no news today that I saw. Is there news?
I think it just I think it sold off so hard over the past couple of weeks since the whistleblower that it probably just got to a point where buyers are coming in. Let me get the chart pulled up.
Here's a headline: Facebook from Bloomberg. Facebook on track for holiday ad surge despite supply chain woes.
So I mean, Spencer, we talked about this before when we were talking about Facebook. I like the aspect that I like about Facebook is from the Oculus department. And again, I think no matter what bad press we have out there, the stock, if it trades down, will get to a point where buyers will come in and say, hey, this is a good deal for Facebook. This is a good deal. I want to take on this risk. And that's what it looks like to me. It looks like just so we were up at 380, stock got beaten down over the whistleblowers. And then, hey, it hit a spot where people came in and decided, hey, this stock, even with some bad press, is worth it at $320 or so. I'm not trading it right now. I'm not touching it, but long term, I do like the Oculus part.
Chris K is in the chat. I'm sure you're liking that headline that he posted. I saw this headline last night that they're supposedly hiring like 10,000 workers in like Germany. Was it Germany or was it just Europe more broadly? Maybe in Europe more broadly, to work on the metaverse. I guess, dude, this is just a distraction technique. Facebook is just being like, hey, metaverse, look over here. Forget about all the other antitrust stuff over here. Look over here.
You know what else is performing really well today, which has been just
Tesla.
Yep, strong
Yep.
as hell over the
Tesla,
past
strong like a
2-3
bull.
months. Let me pull that chart up real quick.
Yep.
I mean, we have Tesla earnings what tomorrow?
Nah, Thursday. I
Holy
think.
cow!
Oh
Spencer,
no,
these,
is it No, it's Wednesday. Shoot,
these
I
are
shouldn't have-
daily candles. Look, 1, 2, 3, 4, 5, 6 green candles in a row. If we zoom out a little bit to back in May, stock was at around $550 all the way up to $860 right now. So we talked about this before, Spencer, that we're not used to seeing Tesla making these moves in kind of a sustained, inching up. We're used to seeing like big 10% candles like this. So I think it's almost kind of gone under the radar how strong Tesla has been the past 3 months, 5 months.
Yeah, I never thought that was possible, but I think you can make a case for that. Let's drop some data on you here. I just looked up how Tesla performs into earnings, into, during, and out of earnings. So earnings is in 2 days, right? It's Wednesday after the close. So we got today, we got tomorrow, we got Wednesday. All right. In the last 3 years, so 12 quarters, in the last 3 years, Tesla on average trades 2.5% higher in the 3 days prior to earnings. Meaning, if you bought the stock 3 days before and you sold it right before earnings, you get 2.5 percentage points. You get 1.5 percentage points higher 2 days before earnings. So if you bought the stock 2 days before, you sold it right before, you get a gain of 1.5%. And on the day, if you buy Tesla the day at the open and sell it right at the close, you get a gain over the last 3 years of 0.9, so about 1%. That's just an average return. Netflix is twice as likely to trade higher into earnings as it is to trade out of it's twice as likely to trade higher as it is to trade lower into earnings. Now, let's go out of earnings, okay? Moving beyond Wednesday. In the last 3 years, Netflix trades down on average 1% the day after earnings. So this is what earnings are Wednesday night. This is looking at Wednesday's close to Thursday's close, right? The one day, that first day after, trades down on average 1%. It trades higher on average by 3% if you go out 2 days after its report. It trades higher by an average of 5% if you go out 3 days after its report. It trades higher if you go a week out and if you go 2 weeks out. Both those time periods are 1 week out is 2.8%, 2 weeks out is 4% higher. So Netflix, with the exception of that first day, so in this week it would be Thursday. With the exception of Thursday, Netflix is historically, in the last 3 years at least, more likely than not to trade higher in the 2 days. Like if you were to take a Wednesday's close to Friday's close, Wednesday's close to Monday's close, Wednesday's close to Wednesday's close, and then Wednesday's close to 2 weeks from now. So Netflix does trade higher the further you go out of earnings. I hope that was helpful. It was a lot of numbers there. I tried not to make it too numbery, but I hope that was helpful.
Spencer, I actually have an open call on Netflix right now because it just is like a no-brainer to me. It's like I feel like they're going to come out and say, oh my God, Squid Game produced this much money. We're going to be able to use this to leverage it into, whatever and get more international hits, et cetera, et cetera. I especially view my options trades as essentially bets when they're into earnings. So it's not something that I would say like, oh, this is a good sound investment strategy. It's more something that, oh, hey, I was willing to take on the risk of this $500 call in the chance that Netflix is going to be up 5% after earnings. But it's already, my contract is already up today so much, Spencer. And if it's up again tomorrow, I might sell it before the earnings call, which I know if I do that, and then the stock does move up after earnings, I'll be beating myself for not holding it through earnings. But
yeah,
I've been learning to, just let go of that and say, hey, I can't go broke taking profits. If I'm up 30% on the contract, then 30% is good. I can take 30% gains all the time. I don't need to hold through earnings. Yeah, Andy, I essentially am YOLOing. But what I'm trying to say is I'm trying to YOLO with a little bit more discipline and strategy rather than just saying, oh, I'm up 30%. I'm still going to hold it through earnings and potentially give up all those gains and go in the red because I was getting greedy. You know, the classic, you know, bears get rich, bulls get rich, pigs get slaughtered. I'm not trying to be a pig out there. So I'll let y'all know tomorrow what I end up doing. Who knows? Netflix could sell off and open down 2% tomorrow morning, and then I'm in the red already before even earnings even comes out.
I want to bring Matt Hammond on, but before we do it, before that, Cameron Dole, yes, there are a couple of quarters in there that were that during COVID that like were insane, right? That will throw off those numbers a little bit, right? The April and the April 2020 quarter or April 2020 report and the October 2019 report after their split. Those numbers were out. You know, they skew the average to some extent, but point still stands. If you go out more than one day after earnings, Tesla is more likely than not to trade higher. That's the point I was trying to make.
Well, now, yeah, real quick before we bring Hammond on, the Netflix, along with the other big FANG stocks, Amazon, Facebook, Apple, they had that one quarter where they all just broke like record revenues, and they all essentially traded down after those earnings reports. I think because of guidance basically saying like, hey, even though we had a record quarter, we can't expect this next quarter.
Yeah, that was last time, I think.
Last quarter,
2 quarters ago, maybe.
I think it might have been 2 quarters ago. Yeah,
I don't know. Okay, let's bring on Matt Hammond from IPO Warriors, and we'll talk about the IPOs happening this week. There's one new stock that's trading today. It's from a SPAC though, so I don't know if Matt is following back at all. Maybe he is because I think they're big internationally. I have no idea. Let's get Matt on here. Matt. Oh, wait, where'd he go? Where'd he go? There he is. Nope. AB, stop messing with my show. Matt, what's up, man?
Hey, Spencer, how's it going?
How was your weekend?
Not too bad. We had a beautiful day out here in Kiev. 2 days, actually. Nice weather, sunny.
Awesome.
Fall colors dropping in, and
do you get that seasonality that weather?
Yeah, full on. And I'm from Northern California, where we pretty much just have, you know, cold summers and warm winters, and you wake up any day and not know what. We don't really have much. Here we've got, you know, spring is birds of colors singing in the trees, and flowers blooming everywhere.
Awesome.
Summers are, you know, nice and green and lush. Fall is, you know, full on reds and yellows, and winter is snow, very cold snow, which I'm not particularly fond of or used to. So yeah, it's a new experience for me, but you know, you adjust and you find the beauty in what you can, and it's actually a pretty comfortable city. If you've never, people don't put it on their list, but having, you know, traveled all over the world, I've been pleasantly impressed with it. It's very affordable. The people are great, very attractive people across the board, and
I'm sure
the food is wonderful. It's pretty comfortable. I mean, it's far easier, in my opinion, than getting around a lot of the places in Asia that I've been to. So,
all right, Matt,
I recommend it.
How was last week for you on the IPO trading front?
I'm still a little bit stuck in the swing positions that I got in on this, you know, last dip. They just finally started coming back to the green side, so I don't have as much funds, and I'm being very cautious of anything I play. And I ended up just not really getting into anything yesterday, though I did watch everything. And we'll look at the two sort of winning trades that one of them was the one that we knew was going to do well, but we can see why, and I'm going to talk through it a little bit, because we see a winning setup after the fact doesn't mean it would have been a great play compared to the ones where I've really been able to take huge wins. And that's because, and actually I'll do these in reverse order simply because it's more interesting. GitLabs was the one that we really were all watching. But when I look at GitLab, and we talked about this last week, we talked about how it was pricing at, you know, $55 to $60. And we expected, you know, that the IPO would then price above that. Well, I didn't expect it to price at $77. That was pretty, we haven't really seen, I mean, usually we'll see something price maybe a few dollars above range. We'll see the range get increased and the price, maybe it's 60 to 65. They really took a lot of the, you know, it's almost nice to see that the insiders, the investment bankers had to pay a premium on top of the price range. But then you see the debut at 94, and you're kind of like, wow, the original price range was like 50 to 55. So we're getting almost to 100% of the debut, a debut price, almost 100% what the initial price range was. And you kind of look at this valuation, you say, this doesn't make any sense from a valuation point of view. So this is all momentum at this point. And how much retail demand is there going to be? And at $94, $95 debut, you kind of mentally say, okay, well, there's likely going to be some resistance at 100. And a lot of these have only briefly kind of made it over 100 and then sharply corrected. And I don't know if I really want to take that kind of risk. And to me, I kind of mentally said, all right, well, the IPO price, is probably the low. If this comes back down, maybe it comes down to 80 or 85. But if it goes up, maybe it goes to 100 or a little bit over 100. So the risk reward at this level wasn't right for me, especially given kind of the state that my portfolio was in on the day this went live. And I kind of weigh all those things out and I think, well, do I want to is this something I'm willing to go all the way to the extremes of my margin? Like a play when I'm really confident on a play, I will take every dollar of spending power I have, minus maybe a little bit of wiggle room, and put it into the play. And is this that kind of play? And to me, it wasn't. And
Okay.
If I had played it at 94, you look off the open, it did a lot of sort of it didn't look so great off for about the first hour of trading. It opened at 94, it spiked up to 96.50, and then came back down to 93, 93.50. And at that point, for about half an hour, you're sitting there going, ugh, did I make a bad trade here? And then it comes back up to 96.50 and drops back down. And you're still thinking, you're an hour into this and you're going, geez, this isn't really looking all that hot. And then it does make a run. If you had held through this opening hour, this would be a very compelling time when it goes up to 97. You say, okay, I'll take my 3 points on the trade. Maybe you pick up that it's hitting this upper resistance here, which often it will break through. But then it comes back down below 94. So any safe approach that I would have normally taken to this, which would have been trailing stop losses, limits at big numbers, would have gotten me out before it eventually made this run up to first 100. You see it tabled off there, which would have been kind of the obvious place to exit. And if you'd have had to have so much conviction in this trade, no, this is going to run to have held even just up here to about 105, which would have been the next logical exit, that it's not an easy trade. Like the trades where we've seen like Docs, that was an easy trade. It just went straight up, and then the whole time it was doing its bouncing around was so far up above the debut price that you weren't sitting in any red positions. So even overnight, it held up. Okay, it came up to 107 here, opened at about 104, 105, dropped down, came up, and then it dropped all the way back down to 93. So if you hadn't sold by these points and you're sitting here and it's all the way back down to 93, you're kicking yourself. Are you then going to hold all the way back up to, this top here? I think it topped out after hours at like 115, but it's not an easy trade. And it's not, just because it was a good pitch doesn't mean that it was the right pitch for you to swing at. And for me, this was a, great play if you had the conviction to, to go after it, but I didn't, and I wasn't in a position to take that risk in this date. So this is just a good example that you're not going to catch every big fish, even when you have them on the line.
It's so interesting because you look at the range, right, and then you see the price opens at significant premium, and then it's priced at a premium, and then it opens at a premium to that, and then it goes higher than that, and you think, oh, everyone just made bank on this. Some people made bank on this, the insiders did, but that just because it ripped up higher doesn't mean it was the easiest trade in the world. It's easy to think back at that, right? Oh my, it's so obvious. But when you're in the moment, it doesn't feel that way, right?
Yeah, so. and having played, I think I've played over 100 IPOs now pretty easily. Yeah. This just wasn't a comfortable, easy one to take profits on. Where even this one HCTI, which I didn't love anyway. It priced at 4 and then debuted at 317. Generally speaking, on a low float IPO, that's a pretty good move as long as it's not like a healthcare or biotech stock. This actually is healthcare triangle, but it's not a biotech. And to see it go from to open at 317, coming back up to 4 is a pretty obvious play. Especially this had some Twitter buzz. It had a lot of allocations. People would be either holding it or at least not selling. If you got allocated the stock at $4, are you going to sell it right away for less than $4? Are you going to give it a chance to maybe come back up? So getting in at 317, if you bought the debut and sold it at 4, it's a pretty safe play, I would say. If you didn't, somehow you held on and sold at 4 in the morning at 480, that was the maximum win potential, but unrealistic. Realistic play here, and it's just easy. There's nothing uncomfortable about buying at 317 and watching it go straight up and waiting it out. Okay, so you can put a stop loss on and not make as much, but you aren't taking a loss, which is really the name of the game. And when you compare that play to this, it's like this, you make a lot of money in a few minutes. This potentially this could have gone way down, and you would have had to hold through a lot of turbulence just to multiple times, which it's not fun when you're up $10 on a trade and then you're down $10 on a trade. And I know people say, oh, but it's not about points, it's about percentage. The way that I've been playing IPOs really is to focus on dollar movements, because I'm sort of like 1,000 shares is a full position, 500 shares is a half position. Anything less than that is just kind of I'm bored and want to play something. Anything more than that is I'm really convinced this is going to run. And I kind of play them that way so that I'm thinking about things more in point moves. Maybe that doesn't make a whole lot of sense to traditional investors. For me, it really distills things into what I typically see in terms of point movement off the debut price. So neither of these was particularly attractive to me. They were just learning examples, especially GitLab. This is the kind of play where 2 years ago, I would have been like, oh yeah, this is definitely going to go straight up. And it would have probably, we saw companies like Lemonade, companies like Big Commerce. Another one was about a year and a half ago, every IPO that was tech growth, brand name. Oh, NCNO. That one was another good one.
Oh, I haven't looked at that one in a minute. How is that one doing?
I think it's back up to about 78, 80, something where mid 70s.
Encino, yeah. Wow, that got to above 100. Huh.
Yeah, that debuted and pretty much ripped. And that was one of the first IPOs that I was actually, I came up with the strategy. It took me a while to really get it in, dial it in. And Lemonade was the first one, and CNO was the next kind of big one. Big Commerce was the first one that I really just stuck it out through day 2 and took a huge win. And after that, I was kind of like, oh, I think I understand this. Yeah. Of course, those market conditions were optimal, and market conditions have not been for the past few months. So now we need to look at, and that's why for me, GitLab was it's kind of like a real test of the waters. It was like, okay, is the water warm again? All right, it is. It's a bit turbulent, but when we see the next sort of brand name recognition, low float. I mean, that was another thing. They did go with the low float, which makes it hard to lose. And, it basically showed me, okay, you can swim here again, and I'll be ready for the next one. And this is kind of the approach that has worked for me in the past, to sort of, let the first soldier ride out on his own and see how he does, and then gauge the battle from there.
All right. So what do we have this week?
This week we've got some important stuff. Nothing particularly noticeable, nothing blockbuster, but certainly a few that I'll be keeping an eye on. This is probably my pick of the week, given that Bitcoin is ripping right now. The miners are all up. This is Stronghold Digital Mining, and they're a US-based Bitcoin miner, and the big kind of point about them is that they use discarded coal. So they're helping Pennsylvania clean up all these like waste coal, piles of waste coal that they have. They bought their own power plant. It's a coal powered, and I know that it's sort of mixed signals here, but they are getting the eco positive label, that they're helping clean up all these discarded coal piles to power their power plant, which exclusively runs their, Bitcoin mining rigs.
Okay.
Now, so to me, it's a buzz name.
I can't tell if this is ESG or not. I don't think it is, but I don't know.
It's certainly they're trying to position it in that angle, and the low float plus it's a Robinhood offering. So
can you explain what that means? Robinhood offering equals lockup.
Well, it's not a lockup so much as Robinhood allocates shares and then recommends or kind of asks that their traders hold them for up to 30 days in the kind of the carrot there is saying, well, if you behave well on this offering, you're more likely to get allocations on the next offerings. And we've seen on a few of the recent ones that it appears to restrict some of the volatility in the float, in that the Robinhood, buyers are saying, okay, well, I could sell this on day one and take a profit, or but that might hurt me in the future. So it's not a hard lockup. It's not like written into the S1 or anything that these shares are locked up, but it does seem to limit. Whereas with the Webull offerings, I would say there's no effect. Webull doesn't say anything about it, doesn't seem to care, and people who get their allocations on Webull will sell, the minute they get an opportunity to take a win. And I think it was last week, or it was the week before, we saw VLCN. That was that EV for off-road recreational, like off-road motorcycles.
Mm-hmm.
That one did run, but not until it first, went through a downward halt. So the IPO was priced at $5. It debuted at $9.01, and a bunch of, I presume Webull IPO allocate, people who received that allocation said, I'll take that win right now, 80% up, down, sell, and that triggered a downward halt. And I haven't seen that on the low float Robinhood plays, and I believe there to be a correlation in that Robinhood is saying, hey, and they say it very clearly, don't sell these right away because we're not going to give you're not going to get to participate in the next, in the next play. So this one just comes at a good time, whereas, even Coinbase has been coming back. I think it's inching up toward, what's it, 295 today, after spending months down at 230, 240, 250. Riot's up, Mara's up. All the Bitcoin miners are up right now. And as long as we don't get a huge crash in Bitcoin between now and Wednesday when this IPO goes live, I mean, Bitcoin is the buzzword right now, and this is eco Bitcoin mining in the U.S. with a low float. So to me, this has, it has what you're looking for in terms of an IPO debut.
So this is Wednesday late morning, probably, right?
It's hard to tell, but usually the low floats go a little bit earlier in the day.
Well, that would make sense, right?
You're right. It takes less time to pair all the shares.
It takes less time. So
you can use Benzinga Pro does have, if you put in the news feed, put in the ticker SDIG, I would say about 50-60% of the time, Benzinga will tell you when the shares will start pricing. And then you can use an app like Webull. On the phone app, you can see what the price indicator is. In other words, this will price, I think the price range right now is $18 to $20. And then, the actual price at which it starts trading will probably be up from there a little bit. But you'll be able to set, if you want to try to buy this right on the debut, which I will be doing, you just set your limit order just above that, say $1 above what you see the indication price being. And then when it does go live, your order will get triggered immediately. And for a play like this, I expect it to go up off the debut. It would surprise me if this didn't go straight up, unless the indication price is so high that it flounders a little bit. But We saw Argo blockchain do pretty well off of its debut when it was uplisted about a week or two ago. And given the conditions for Bitcoin mining, this looks interesting to me.
Okay, what else we got?
Okay, Biofrontera, we talked about this last week. Some skincare overexposure to the sun. I mean, not a lot of customers, not great financials. The only thing that might bring attention to this is the ultra low float, 3 million shares. But for for IPO traders that target these low float debuts, would you rather have, skincare for overexposure to the sun, or would you rather do eco-friendly Bitcoin mining when Bitcoin's flying over 60,000 a coin? I don't know. I don't know if this gets much attention. Maybe I'm wrong, but low float's been where it's at. Marpi, this is also rescheduled. Once things start getting rescheduled a bunch of times, I think people start losing interest in them, partly because it shows that there's not as much. I mean, if they're not going live, it's because they couldn't get people to buy the shares. This one is Think Equity as the underwriter. It's some AI-driven healthcare software for self-insured companies. I don't know. This isn't that interesting to me.
I don't even know what that means.
Me neither. And I didn't really find too much information that seemed to understand what it was. I checked out their website, but I guess a big piece of this is that they are merging with another company that brings kind of the AI piece of it. And it's some kind of companies have their create healthcare groups to give benefits to their employees, and this helps manage the pairing of those groups with the actual healthcare providers. Yeah, so it's not all that sexy to begin with.
No, it is not.
You can't just throw AI at healthcare and make it super interesting. It doesn't even work for the pretty interesting sounding drug discovery platforms. Have not done well on their IPOs either. So unless everybody and Twitter starts, FinTwit starts going, oh yeah, this is the one.
Which you never know. You never know.
You don't never know.
Never say never.
They were able to drive our NAS up, over 50-80% over the first day or two. So if they can do it, to anything, 2.7 million shares is potentially, can become a target on its own. But as far as the company itself and where I'm at with trading these, I think the SDIG is my favorite for the 20th. Then we go to the 21st. This one is Vita Coco Water. It's coconut water. So
I've heard of this one.
Healthy stuff. Yeah. To me, it's very similar to Oatly. The float is pretty similar. The valuation is pretty similar. The space is pretty similar. And also this, I believe, is also a Robinhood offering. So it's just not, I mean, first of all, it's my wife's birthday on October 21st. She'll kill me if I'm staring at my phone all day.
It's like happy birthday to your wife, but also it's like coconut water, It's like, really?
How excited are we going to get about coconut water?
Happy says his mom's addicted. I believe it. But is it really that
It's
sexy?
amazingly good stuff. When I was living in Hainan Island, China for 10 years, we could buy, you just walk straight out on the street and buy whole coconuts. They just, with a machete, chop the top off of it, stick a straw in it. And it's an awesome hangover cure. It's a great way to, if you've been in the sun all day, it is amazing stuff. It's very nutritious and it's good stuff, but I don't know how much excitement's going to come out of this one. And I'm really trying to be more disciplined and trying to pick, what I'm playing and looking for the clear winners rather than play everything and try to squeeze just a little bit of juice out of each play.
So there's nothing about the actual IPO itself that excites you?
No.
Okay. Fair enough.
Brand name, brand recognition, day two runner maybe. Or day two jump. I just don't see it moving a whole lot based on what Oatly did.
That's fair.
Yeah. All right. P10 Inc. This is an they do advisory service for alternative assets to financial institutions. Okay. And I went through their website a lot. It just seems like a fancy investment company, which actually these, JP Morgan, Goldman Sachs.
I could be into this. I could be into this.
Yeah, and I'm into it too. I don't particularly like uplistings, and the reason is that uplistings generally we see a spike in the OTC shares, which were PIOE. We see a spike as soon as they announce that they're going to uplist to the Nasdaq.
Yes.
So we see that they've gone on a pretty big run. They're up 200% since October 2020. It was priced at 750 just about a month and a half ago, and went up to 1150 at the close of last week. So to me, it's kind of like, in September they said, "Hey, we're uplisting," and everyone's like, "Okay, well, I'm going to buy this," and they've jumped the price already. So of course, once they list on the Nasdaq, then other indexes and hedge funds will be able to buy this more easily. I think a lot of holding. A lot of companies that manage financial assets for other people, can't delve into OTC stocks, and now they'll be able to play this. So maybe we'll see. Maybe that's what everyone's jumping in on. They do have very strong numbers. I mean, revenue's up 144% over the last 6 months. Operating profits up 25%. Their net income and cash flow positive. So all of those are great numbers. 20 million shares itself isn't exciting on its own. It's not 30 million, but it's not. I get excited on low float below 10 million, but
yeah. Well,
again,
this would seem like a good business to be in. That's irrelevant for the first day or two of the stock, obviously, but I could be into this. So it seems like you're into it for a different reason. And all right, this is for, what is this, Friday? Thursday?
This is for Thursday, yeah.
All right.
But again, I'm not going to be trading Thursday, so take that with
fair enough. Fair enough.
Salt on whatever.
All right,
picks
we got any more for this week?
Got a few. Portillo's.
Portillo's. Oh, man.
You know about, but I've never heard of. So.
We got to talk. I can't wait to talk about this one.
Yeah. Okay. Well, so, they didn't have a great, they didn't, like all restaurants, they didn't do great during COVID, but they're bouncing back, and they were able to maintain, cash flow positive, net income positive, operating profits, and revenue is still, it's still up for the last 2 quarters compared to a year ago. That doesn't mean a whole lot because we are, coming out of a pandemic, and gross profits. None of those financials mean a whole lot, except I do like to see gross margins of 70%. That just means as we make more money, as revenue comes back, our margins are very strong. We'll be continue to be a profitable company, and that they survived the pandemic. We all believe that there's less competition now. A lot of restaurants went out of business permanently. So maybe this, I was wrong about the that lifetime holdings, that gym IPO. They of course debuted below their IPO price, which helps, but they got a Kramer pump. People got into it, and Portillo's does seem to have that brand recognition. To me, it's a little bit like Bros was for the West Coast. Portillo's, everyone I've talked to who's in Detroit or Chicago or in the Midwest has said, "Oh, I love that place. Oh, my friends will be into that." And I'm just like, I don't know what this is. So you want to say something about this one?
That's not a bad idea. They're not in Detroit. They're not in Michigan, but they're in Chicago, and then everyone who's been in Chicago has had Portillo's, and yeah, it's a name brand for sure. So yeah, I'm into the name brand recognition. We've seen that carry IPOs in the past, so I'm into it for that reason. I don't, not necessarily gonna buy into this kind of a restaurant long term, but as far as the
it's
IPO,
not health food, from what I understand.
it is very opposite. It is the opposite of that, but it is good. It is not good for you, but it is good.
They almost never are.
Yeah.
The contrast between Coco and PX, but I'll be watching this one and probably not playing.
All right, what else we got here? Infusion.
Infusion, I like this one. It's an investment managing reporting software. Revenues are up 30% over the last 6 months. Gross profits up 36% in the last 6 months, and it has that trifecta of positive operating profit, positive net income, cash flow positive for the first 6 months of this year. And the float isn't too high. So if I was looking for kind of a safe one that if it didn't work out right away would probably bail you out in the long run, this one looks pretty good. in this market, if especially if earnings are strong across, all the earnings that come out this week, by the time Thursday rolls around, if the market's in a good mood, this one would be pretty interesting for me. Wink, this is a wine grower and retailer that's done really well. And they basically have a vertical market for growing and selling their wine on a subscription-based model. Their growth was really high between 2019 and 2020. Maybe they benefited a bit from the pandemic. In the last 6 months ending June 30th, we've got revenue up 20%, gross profit up 38%, but they are negative across the kind of the baseline financials of operating profit, net income, and cash flow. The thing that makes this a little bit interesting is that it's wine and it's a very low float. They're also moving towards operating profit, income, and cash flow. So if everybody gets excited on the SDIG play the day before and we see that spike, we might see people kind of turn around and go, okay, what's the next low float IPO? So maybe this one's interesting just because of the low float and it's not a biotech, but it will need, if you want to play this one, I would be checking Twitter and seeing, are people talking about this? Are there at least kind of 3 to 5 people who give this some kind of pump or a thumbs up or a, hey, I'm watching this? If not, it probably isn't a great play, but it's worth keeping an eye on simply because it's low float, it's wine, it's growth. They're moving towards cash flow positive, and that combination has worked out more often than it's not. This
All
one
right, we got a couple more, and then I see our next guest here. So
okay. Runway Growth Finance. I'm gonna skip this one. I couldn't find almost any information. It's just on a couple lists, so I'm gonna skip that one.
Okay.
Minerva Surgical. This is UTRS, a uterine medical device that offers alternatives to hysterectomy.
Nice ticker.
I know. Sometimes you just think, okay, you guys get a gold star for a creative use of 4 symbols. Revenue is up 117%, gross profit up 255%. They are negative on the operating net income and cash flow, but their baseline financials are improving, and the float is just 6.25 million shares. I would really like this, except there's a big red flag in that they are in an ongoing patent infringement lawsuit. So they're kind of like selling a bunch of devices and services, but you don't know if the market's going to look at that patent infringement lawsuit and say, no thanks. So again, if this becomes a momentum play for some reason, generally we haven't seen it happen so much in kind of obscure medical devices, but it's one where if I was sitting at my desk, I might play it if the debut price wasn't too extreme or came in below the IPO price. But it's just everything on the 21st for me is kind of like, interesting, because I'm not going to play it. I'm not assigning all that much emotional attachment to it, but it does have that low, really strong growth, highly necessary device, and conservative float. So, if it weren't for that patent infringement lawsuit, they might not even need the IPO, but I would be, it's a red flag. So I don't know. Singulate, we talked about it before. Drug delivery for ADHD. It's rescheduled from last week. Low float. Some people are into this on social media. People keep asking me about it, so maybe it goes well. We don't have a date yet, and when we don't see that, we've already seen it rescheduled twice. I kind of tend to think it's going to keep getting rescheduled until it sort of falls off. And by the time it does show up, we'll all be so tired of talking about it that there won't be much interest. Eris Water. This is a water treatment for like oil rigs in the Permian Basin. High oil prices are bad for business because oil companies are pumping less. Revenue, gross profits are down. It's just not I wouldn't touch this. I don't understand it well enough. Ventix, therapies for inflammatory diseases like IBS, low float. Again, for the last time again, I'm not going to play biotechs anymore. And I write this more for myself because I keep breaking this rule and paying the price for it. And
fair.
Yeah, just don't do it.
Fair.
Anyway,
All right, Matt,
that's it for now.
Wow, we got a full slate this week. Matt Hammond, IPOwarriors.com. Link is in the description to his site, to his newsletter. And
yeah, sign up for the newsletter at IPOwarriors.com. I'll send out a little bit more analysis on these and my kind of strategies for trading each one. IPOwarriors.com. Get the newsletter. It's free. And follow me on Twitter. I send updates there as well.
Thanks a lot, Matt. All right, someone in the chat was asking me, was just asking, where's Jake? Jake is here. Let me get Jake on right now. Jake Wujastyk from TrendSpider. He's the man with the charts and the raindrops. Jake,
I'm here.
how are we doing?
Doing well. How are you?
I am doing good. I'm doing better. I don't think I'm allowed back in the office yet, but
Glad to hear
I
you're
could
doing
be
better.
in the office if they let me in. I would go, but I don't think they're going to let me in right now. Hey, I saw you were down in Florida for the FinTwit conference with a few people from Benzinga who were there as well. Tell me how that was.
Yeah, it was great. It was really the perfect amount of people. It was big enough where you could meet a lot of people, but it wasn't too big where it just kind of got out of control. So it was about 150 people. I had a great time and met a lot of people that I've been interacting with on Twitter for quite some time and never actually shook their hand. So it was overall a great time.
Awesome. All right, well, let's get some charts up. That's what the people want. So what that's the SPY. I can see that.
Mm-hmm.
So tell us what you're looking at here.
Yep. So, I mean, the way I look at the markets, I generally am always going to look at a top-down approach. So I kind of mentioned that every time I come on the live stream. If I want to look at individual names, I need to look at how the overall markets are looking because they have a lot of push when it comes to these individual names and their setups playing out. So SPY, QQQ, IWM, and Bitcoin are really the ones that I'm always looking at to see, okay, are we setting up strong for next week for the broad markets to rally? And then I kind of look at the individual names to see these setups that could possibly play out with a strong market. So SPY, just looking at the weekly chart, we have a couple really strong things that have happened over the last couple days. So on the weekly side of things, we did hold this trend zone area. And this is something that I don't think I had really used too much previously, since this is something I really just started using a couple weeks ago. But it's essentially using the channel tool drawing annotation feature on TrendSpider to create these zones. So it allows me to highlight an area rather than an exact price point. So you can see here that there's a couple times on this area that didn't necessarily test the exact trend line here, but it did test within this zone. You can see it happened here. And we could always make this a little bigger too. It's just depending on how much margin of error you want. And if we make it a little wider, you can see we touched here. So trend lines should always be really more of a trend zone. So that's what I have on here. And we also have the volume by price from the COVID lows. This was a really, really important time in the market where the market pretty much reset. So we want to measure volume distribution and where is volume and where has it transacted since this capitulation point. You can see we have the point of control down here around 415 on SPY, but we also have a ton of volume here from around 430 to around 445. And you can see here that that acted as a really nice base for price over the last couple of weeks when we were pulling down to new lows from the all-time highs. So now we're starting to kind of peak out of this trend zone support area, and we have a lot of blue sky above. Now, if you look at the daily chart, you'll see here if we anchor the volume by price in the anchored VWAP from the swing high here, which is pretty much the all-time high, you'll see a couple things. You'll see one, we finally did close above this September 2nd anchored VWAP. So you can see here that this acted pretty much as resistance the whole way down. We had a slight close above it on September 24th, but then we didn't have any follow through, and we had it once again in the first week of October, did not actually close above it. And then finally on Thursday, we just blasted through it. Friday, we gapped up again, and now today we're actually engulfing all of Friday's action. So really strong price action forming here. If we move this over a little bit, you'll see here that we also have this other small volume node shelf type of thing forming here. So and just move that here. And we've got this next area of volume supporting price up here. So this can act as kind of another launch pad for price, as it did back on October 12th and 13th. So it's really hard for me to be bearish on the markets right now. I mean, who knows? Maybe we could fill some of these gaps below. But a lot of people have this fallacy in the market that gaps have to fill, and they have to fill within a couple days from when they gapped. That is not the case. These gaps could literally be open for months, or who knows, they could never fill. You don't want to create a thesis on, oh yeah, we gapped up, so we got to fill that gap in X amount of time. It doesn't work like that. So definitely kind of take price action the way it is. In this case, SPY is looking very strong. The Qs are looking strong as well. So one thing about the Qs is we're actually kind of lagging SPY. So before we kind of go over this percent range RSI combo that really helped me kind of figure out that we may be bottoming or close to it, we want to look at the swing high anchored VWAP, which is the all-time high volume weighted average price, meaning we're just measuring the volume weighted average price from this high when the trend reversed. And you'll see here that we're actually lagging SPY a little bit. Remember when we were just looking at SPY, we had 3 candles above the anchored VWAP. Here we just have we just pretty much have 2. So SPY was actually leading here as far as a function of the anchored VWAP from the all-time highs goes. Now, one thing that I really want to go over here is this RSI percent range combo, which kind of explains why I'm still very bullish on the market here. And it did help me kind of find an area where I thought we would probably catch a bottom. And I've had some comments like, yeah, you know, you're only looking back since 2019. That's not enough time. Yeah, maybe, but it's almost 100% win rate from 2019. So you kind of have to use a lot of these different variables together. So in this case, what I'm using is I'm using the Williams percent range 10 and I'm using the RSI 10. The reason why I'm using 10 is because you have 10 trading days in 2 weeks. So we're essentially looking back 2 weeks on the RSI and the Williams percent range. Both of these are oscillators, and the percent range is used with the RSI because it triggers divergence before the RSI. A lot of the time you will see divergence on the percent range and the RSI does not show that divergence, and unless you maybe go to a lower input, meaning maybe you're looking at the RSI 5 instead of the RSI 10. But when you're looking at the RSI 10 and the Williams percent range 10, which both have the same input, the percent range a lot of the time will show divergence when the RSI doesn't. And that's exactly what happened a couple weeks ago. We had this higher low here on the percent range as we hit a new low, and we had the RSI oversold. So you'll see here that there are times where we have this signal and we have a dead cat bounce. So what you do is you kind of see this initial dead cat bounce, which is highlighted in orange. And then you'll see as we hit new lows, break this previous low from the dead cat bounce, then you want to start looking for that divergence on the percent range. And that's exactly what happened here. We did not have divergence on the percent range shown by this orange circle, and we didn't have any type of divergence on the RSI. So that wasn't really a strong signal that we're bottoming. But once we retested this RSI oversold and we showed divergence on the percent range, that was the signal that we're probably pretty close to a bottom, if not bottoming. And this was definitely a nice signal a couple weeks ago to find that bottom. Now, one reason that I'm very bullish on the market still, and I think we could move up quite a bit, is notice something, this interesting relationship with the percent range and the RSI. The percent range is always going to signal overbought before the RSI. A lot of the time, this will stay overbought for a long time. So what you want to do is you want to look and see, okay, well, the percent range is overbought, but the RSI is not yet. Notice that the RSI is only at 61. And notice that we've topped out in the RSI way up here in the 70s to 80s. So the fact that we're signaling this momentum on the percent range and have not hit the RSI overbought levels yet tells me that we probably have a lot more room to go. Now, on top of that, if you look at the seasonality going into November, it's very strong seasonality. So I want to measure the seasonality since pretty much the financial crisis lows. And you'll see here going into November, we have a 75% win rate. So that means 75% of the time, November closes higher than October over the last 13 years. That's a decent data set. Now, if you look at since 2016, which was another kind of reversal point in the market before we melted much higher, you can see here we have an 80% win rate. So even higher than when we're looking back since 2009. And if you look at IWM, which a lot of people in the past and still do use IWM as kind of a risk on, risk off type of indicator or just overall kind of sentiment gauge, you'll see here that IWM is looking like it could finally start to break out of this symmetrical triangle resistance. We did get rejected right at it on the daily, but if you zoom out and look at the weekly, we have been trading within this area for way too long. And generally, when we have a volume shelf like this, meaning we've got a lot of volume holding here, you've got a pretty big launch pad for price. Now, what's interesting is last week was the first time that we've closed above the point of control since August. So that means that buyers are in control.
I try to stop for a second. Point of control being the absolute peak of volume profile.
Exactly. The point of control is your largest volume node. So for those that aren't familiar with the volume by price, these volume bars, these gray bars, are measuring how much volume has transacted or happened at different prices since the COVID low. So we're measuring where has volume aggregated since we reset in 2020 in March.
I love this chart. First of all, this is a weekly chart, everyone, but I love how it just shows you relative to now how little volume occurred at those lows. I know we're only down there for a couple of weeks, but you're comparing a couple of weeks to a couple of months here, but it really does put things in perspective.
Yeah, and I mean, generally, when you have this type of setup, you resolve to the upside a lot of the time. And so this is why I'm pretty bullish on some of these smaller cap names, and I'll go over a couple of those. When I say small cap, I'm not talking about $50 million market cap. I'm talking about a couple $1 billion or maybe even $5 billion market cap. And the thing I want to point out here on IWM, November has a 100% win rate since 2016. Now, that doesn't mean we're guaranteed to close higher in November, but it's a pretty strong indicator of what has happened in the past since 2016. But if you want to go all the way back to January 2009, which is essentially kind of anchoring your seasonality, you don't want to necessarily look at seasonality since 1985 because there's so many different cycles that have happened since then. You want to look back pretty much since the main crash, pretty much since the last big event. Now, some could call that COVID, but if you're looking back since COVID, that's only a year and a half. You can't look at seasonality on a month-by-month basis, only a year and a half out. There's not enough data there. So if we do look at the financial crisis, looking back, November has a 92% win rate for IWM. So I have been wrong over the last couple months saying we're ready for small cap season, but going into this stronger time of the year, this kind of makes sense why we possibly could get that breakout. Now, notice how long we could continue to trade within this zone. So you always have to take price action into account first, and then you go from there. Now, if you want a quick example of kind of what
wait, don't leave yet, because there's a question from Dan in the chat for the peasant folks. For the peasant folks like Dan, just explain again what the volume shelves are.
The volume shelf is an area where you have a bunch of volume holding at a specific area. Now, it makes sense here because we've only been trading within this range for 10 months. So that's a lot of volume that has aggregated within this area. Now, I like to measure that from the COVID low, because if we measure the volume by price from the start of this symmetrical triangle, we already know all that volume is going to be happening there because the price action is pretty much traded within this range for 10 months. So I want to see a big range, meaning I want to see pretty much from the COVID low down at 95 all the way up to 230. I want to see, okay, is volume supporting price up here, or do we not have a ton of volume? If we had this much price action occur and we didn't have a big volume area here where you've got these multiple volume bars showing we've got a lot of participants that have where volume is aggregated from this participation, then that would be a red flag. But this is what you want to see. You want to see a huge range. I mean, this is literally from 95 to 230. And you want to see a lot of that volume supporting price up here. And the reason why I kind of jumped forward was I kind of want to show you guys a couple examples of how this has played out in the past. Netflix is a good example of this. If you look at the monthly chart, so pretty much Netflix if you anchor from the reversal here, the 2019 lows, and notice you don't have a lot of volume up here, right? That's because we're measuring the volume from way back here. But if you move this and pretty much measure it from this last pivot, look at all that volume there. It looks very identical to IWM, except IWM is just taking a little longer. And so you have a lot of the time, you have this resolve to the upside when you've got a lot of this volume forming a base here. And sometimes it will trade around the point of control, which is, your biggest volume node. But a lot of the time, the point of control is part of the volume shelf. But there's also times where it's not. And I'll go over an example of that in a little bit. Do we have any other questions before we move forward on?
There was a couple of ticker requests in the chat, so we'll get to those in a few minutes. But I want you to run through your examples first, unless you didn't have more, in which case we'll run through tickers from the chat.
Well, I just want to go over IWM real quick and touch on, we went over the weekly, but really look at the monthly. If you look at the monthly chart, this is what kind of kept me from being too bearish. I did think that, we could possibly have one more flush, but the RSI and the percent range kind of kept me a little level headed there, and kind of stayed on track with, just waiting for that signal to happen. But if you look at IWM on the monthly chart, same thing. IWM is a great measure of sentiment in the market for risk on, risk off. Generally, you're not going to have a breakout of this long-term resistance, a retest of the resistance acting as support, and a bull flag on the monthly if things are looking rough in the market. On top of that, you also have this really strong seasonality. So if we break through this resistance, this thing could really take off. And a lot of the time, everybody's watching IWM. So as soon as IWM breaks this high of around 234, everybody is going to take note. Everyone's just kind of waiting for that price action to confirm that small caps are breaking out. And then it becomes a self-fulfilling prophecy because everybody starts jumping in at the same time, and that exacerbates the whole move. So why am I very bullish on the market? One, SPY, QQQ looks strong, but on top of that, IWM, which is more of a risk on, risk off. In this case, risk on. People are probably not going to be too mad if this breaks out, and it's not going to hurt the sentiment of the overall market if we do move to the upside. So we'll just have to play that out. But Bitcoin's another one. Bitcoin was another reason why I was like, markets are really breaking down. Bitcoin should definitely be breaking down because you have some liquidity issues in the market sometimes, and that flows over to Bitcoin. And Bitcoin's a pretty good gauge. If you look at when Bitcoin had its flash back when we flashed down that one day from like 52K to 41K, that happened like 2 days after the market topped. And so Bitcoin was actually your signal that there's probably some liquidity issues going on in the market, and we may have a stronger move to the downside. And now Bitcoin's been leading. And if we can really break all-time highs, I think Bitcoin is just going to blast off. And you really need to use the fib extensions because you don't have any price history. We're at all-time highs. You can't look at the previous pivots or the previous highs and create levels. You have to use the 1.618, the 2.618 extension. I like to use the 0.618 extension. Some people use other ones, to each their own. But I'm just taking this measured move from the April high to the July low, and then I'm finding the extensions as a function of that move. So if we do break out, first target is 87K, second target would be like 123K. Now that doesn't mean it happens in a week. This could take a year. But that's kind of what I'm seeing as the levels above to watch into the coming new year and months ahead.
Let's do it. We got a few minutes left here. Let's do some questions from the chat. Someone asked about fuel cell. If you could take a look at FCEL.
FCEL. Yeah, this one looks really good. If you look at the monthly chart, this is exactly what you want to see. Same thing. If we measure the volume by price, kind of from this capitulation point, notice that you've got a lot of volume holding here. Now, there is a big fallacy when looking at the volume by price that, oh my gosh, this volume bar right here is huge. It's got a lot more weight than these here. these are all the same. These are all the same weight. The reason why this volume bar looks so much different than these volume bars is because we're on log scale. So, you know, a dollar move down here when FCell was trading at 25 cents was a huge deal. Now this thing moves up $1 and it's not as big of a deal. So that's why these volume bars look different. If we turn off log scale, you'll see they're all the same width. So, you know, don't look too deep into the width. Look at how many bars there are, and that's what you really want to look at. So this is another example of, you know, you've got quite a volume shelf here, but it's actually not the point of control. The point of control is way down here at 220. But look at how many volume bars there are. 1, 2, 3, 4, 5, arguably pretty big volume bars here, showing you've got quite a bit of volume aggregating here, and that's exactly kind of what you want to see. And then on top of that, if we use the trend zone area here, you know, we've already kind of broken out. This is a pretty strong breakout, and this is just kind of stair stepping. This is the kind of setup you want to see, just stair stepping up and volume supporting those moves. So yeah, FCell is looking very strong here.
Justin asked what you used before COVID in terms of the volume profile, and Jake, you've been using volume profile for years. You only just reference COVID because you have to you want to tie it back to a pivotal point in the chart. That's just why you tie it.
Yeah, exactly. You're just now, before I kind of had this tool on TrendSpider, I would actually do this manually. So what I would do is I'd turn on the volume, and then I'd say, okay, well, you know, there's a lot of volume here at this price level. There's a lot of volume here at this price level. And then I'd start like saying, okay, well, this is the range for this big volume bar. And then here's the range for this volume bar. And I'd kind of start looking at, okay, where are these areas overlapping? And that's how I would do it before. So it was a very tedious process. And that's the thing about TrendSpider. All of the features that we have on the platform are geared to make the whole process of finding these areas more efficient. So you don't have to do this by hand. So you don't have to go on the chart, look back 10 years and look at every November and see what it did.
Yeah.
All
right. Couple more. Charge point for Dan, CHPT.
CHPT?
Yeah. Charge point, right?
I'm not sure what this one is.
EV.
Yeah, so this is the monthly, and the problem is it's the 18th, so we still have time, you know, before the monthly candles close, but a decent wick here. I'm a big believer in keeping an eye on how things are setting up before a candle closes. That doesn't mean you always have to act on it, but you still have to get an idea of kind of what's going on within that area. Is there in this case on the monthly chart, there's a pretty big wick here. So showing that, you know, you did have quite a bit of you know, buying or supply drying up here as this price moved down and the price was able to move back up. So, I mean, this is kind of just at your previous lows. It's up, almost a 1% today. But, I mean, you've got a pretty nice bull flag here. And that's the thing. I'm not this guy who's like, oh, that, you know, this thing's got to be. I'm just looking at the general kind of setup here. It's kind of flagging after. A lot of people wouldn't call this an exact bull flag, but it doesn't have to be. You just have to look at the price action. Here's your impulse move. Here's your consolidation. And so this would be your area where you want to break out from. It's going to be kind of rough estimate. You do have 2 wicks that you can connect here. So there's no wick here because that was the high of that previous day. But you can kind of connect them here. And, you know, that would be the area that you want to break out of. If we want to get really technical here, you know, just connect these 2 points here and you've actually got more of a pennant forming. So that's the way I kind of look at this type of thing. This looks really strong, actually. I've never even heard of this stock, but it does look pretty strong right here.
Couple more, and then we'll let Jake run here. Sovo, SOVO. This is one I don't know.
Sovo. Let me go over one position I'm in right now and kind of go over why I'm in it. Maxar. One, we just went over the IWM chart. We're looking at small caps. This is like a $2.3 billion market cap. Mm-hmm. If you look at the weekly chart, one, we've got the volume shelf here. You guys will hear me talk about that a lot. So you've got, if we anchor from the COVID lows, we're measuring volume from there. We've got this recent breakout, or we barely didn't break out, we're kind of retesting this resistance area. So I'm thinking if we just look at the volume weighted average price from this high, this may get to 32.90 to 33 pretty quick if it can move up off this shelf. So I just wanted to go over that one to kind of show you guys like a realistic example of like how I'm looking at the markets and why I'm taking a position. But this is one that I've been watching for quite a while, and it's that lower. It's like a $2.3 billion market cap. So it's not a small cap, but it's within that IWM type of market cap. And so looking at IWM, then you go into individual names and see what's looking good and how can IWM strength help out this setup going into the month or two ahead. But all in all, that's what I just want to quickly go over on MAXR. What was the ticker that you mentioned?
You do like your flag formations. SOVO, SOVO.
SOVO. Oh, okay. There's not a lot of data on this one. I guess this is.
I don't know this one. Full disclosure.
Yeah, I mean, it's really hard to do technical analysis on something like this. I mean, the only thing you could do is you could look at these previous highs, and we're pretty much right there. But I would go to the 65-minute candle on this to get a little more idea of what's going on. Doesn't seem like it's a very liquid name based on the volume, but who knows? Maybe if it breaks these highs, it will turn on some scanners or something, or show up on some scanners.
Okay, last one. Lemonade, new kind of insurance. Not that you care about what the company does.
Poof. I remember this thing was like,
yeah, me too.
180 or something.
Yeah, this was an IPO. Recent IPO.
Yeah. All right. See, like here, I would honestly probably turn on like the weekly just to get a little bit of a better idea. Yeah. So if you could you could measure the volume aggregation from the IPO. If you did that, it'd be here. See, there's quite a bit of volume holding here. Now, initially, this is going to act as supply because you have quite a bit of volume holding here. So imagine you bought Lemonade at $72 and you just dealt with a drawdown to 61. As the price gets back up to your break-even point, you may be a partial seller or a full seller of your position. That's going to add supply onto the market because that's just break-even selling. Some people are like, just dealt with a 15% drawdown. I want to get out of this and move on, when really that's probably when you should be buying. But this one looks good, honestly. The weekly looks good. You've got these higher lows over the last couple of weeks. So that's something to keep in mind. And if you look at the monthly, there's just not a ton of monthly candles. But you can kind of see that same thing. You've got quite a bit of volume profile here, showing volume is supporting price at this level. Now, one more, MJ. This is the weed ETF. May not look great right now, but if you look at the weekly and the daily chart, we're getting really close to a potential breakout. We're entering kind of a weed season as well, going into the end of the year, into January.
Croptober.
Yep. So if you really go back since here, you'll see that if you have weak seasonality, look at that as maybe the time you want to buy. And then notice how going into January, February, you have pretty high win rate versus kind of how this is done. So I would be looking at some individual weed names here, looking at the MJ chart. This thing likes to just destroy everybody and then, have some massive runs. So very similar to what we had here. Huge sell-off, everybody capitulates, and all of a sudden everybody's back in. So keep that one in mind too.
All right, wait, Jake, before we let you go, I got to ask you real fast. On a scale of 1 to 10, how good is Dutch Brothers coffee?
I can't drink coffee. I'm too high strung.
All right. You heard it here first. Jake Wujastyk is the founder of TrendSpider. Check it out, trendspider.com. Promo code
BZ25. If you guys want to try it out, BZ25.
Up there on the screen, guys, right there. Jake, a pleasure as always, sir. Talk to you again next Monday. Yes. Same time next Monday. Have a good one. All right. AB, where'd you go, man? AB, are you here? Are you around? Do you still work here?
I'm here, Spencer. I work here as far as I know until they tell me otherwise.
All right. How we doing out there? We got one last guest on the show today. Who do we got?
Yeah, we've got our very good friend of the program, Chris Capri. from Second Skies Trading. So if you know Chris, you know we're going to get into some, looking at the flow of options. So if you have any tickers in the chat that you're looking at trading options on, throw them in the chat. Chris and I will take a look at them. Without further ado, Spencer, let's go ahead and bring Chris on stream. Chris, how we doing this beautiful Monday?
Very good. And yourself?
Good. Cannot complain. Real quick, just since we're not on Get Technical with our usual audience, if you want to give yourself a quick introduction before we get into some charts and some tickers.
Sure. So I am been trading for 21 years. I'm a former broker on Wall Street. I've traded for a hedge fund, JNF hedge fund. I was a broker at FXCM. And I started Second Skies in 2007, mostly back then because the hedge fund trainees wanted to keep training with me. And it just blew up into this big business of having clients in like 160 countries worldwide. So my brief description of how I trade the markets is very straightforward. The most dominant or most proximate driver of the changes that you see on your charts is order flow. And so I'm going to share a screen real quick, but just to get that in there. But it doesn't matter if you're a fundamental trader and you trade on fundamental reasons, you're a technical trader like TrendSpider and you trade on technical reasons. If you're a sentiment trader and you trade on sentiment or whatever it is, doesn't matter. We all have to go through this very narrow corridor called order flow. We have to make a buy and sell decision. And if we don't make a buy and sell decision, it doesn't influence the market at all. If we make a buy and sell decision, it gets activated, then it's actualized order flow. And that's the most proximate driver of price. With that being said, some of the most dominant players in the market in terms of activity, in terms of position sizing and everything, are option dealers and market makers. And so with that being said, my whole approach to trading the markets is I trade the order flow. Very simple. I don't look at, Williams percent indicators or anything like that or any of that stuff. I look at order flow and what's going on in the market. And I want to see what's the dominant flow in the market and how also the option players are positioning, because that has a major effect where they're heavily active.
Got it. So with that said, we do have a few big names getting ready to report earnings, which of course earnings season is when a lot of options traders, both big and small, come in and make some big orders. So I think let's take this time, Chris, and maybe go through some tickers that have earnings coming up this week. I know one that I've been watching, I actually have an open call on right now, is Netflix. My thesis there is earlier we were looking at some data from SimilarWeb, who curates kind of like alternative, they can look at how much or how many people are visiting, the cancellation page for Netflix versus how many people are visiting the sign up page. And they had some numbers that that could indicate a strong report coming tomorrow after market. Of course, everyone's been talking about Squid Game, some other big series that have helped propel Netflix to this point. But I'm curious about, all that data aside, what is the option flow looking like?
Sure. Let's take a look at Netflix. So, all right. So with that being said, I'm bullish medium term, long term on Netflix. It's hard not to be, especially after they broke out of this consolidation. And not only did they break out of this, consolidation that was resistance, but then they came back right to that resistance and said, we're treating that now as support. It was a ceiling. Now it's a floor for the next leg up. And that's a good sign from the order flow perspective that not only the sellers are out of the market, but then the buyers are saying, hey, that level, we respected that level so much that we are now going to treat it as a base. And then they launched it higher from that. So that's what we call a role reversal level. That's the order flow saying this level is super critical for us, both to the sellers and the buyers. Sellers while I was in this, and buyers now that we've broken out. So here's the overall landscape in terms of the flows, open interest, and everything. So prior to today, I haven't looked at today's options on Netflix, but I can pull that up. But prior to today, we had about 240,000 calls on Netflix and 337,000 puts. Now, that doesn't mean that people are long puts and long calls. There's a mix of that. I'm willing to bet some of those puts, even though there's more puts in the market, some of that was selling, people selling cash secure puts, which is actually bullish for the stock. So if there's a decent chunk of people that are selling cash secure puts, that's bullish. It's bullish because if I sell 100 cash secure puts at say like 600, what's the option dealer got to do? You might know the answer. What's the option dealer got to do if I sell that 100 puts?
What does the option dealer have to do if you sell 100 puts?
Yes.
they have to take on that risk, or
They're long 100 puts,
right?
Which means they have downside directional exposure. You're a dealer or market maker. You don't want directional exposure. You want to be delta neutral, and you want to just make money on the spread because that's a risk-free business. So what do they have to do? They have to get long the stock to offset that position. So I sell 100 cash secure puts. They are long 100 cash secure puts. That means they have directional exposure to the downside, and their risk is to the upside. If the market goes up, then those puts decay fast. They lose money in that. So to offset that, they have to get long stock, and that helps fuel the stock higher. So I'm willing to bet a good chunk of those are cash secure puts, not people buying protection, but cash secure puts, which is helping to fuel the rally on this. Now, with that being said, you're talking only maybe just under 600,000 options out there. And today alone, we've printed another 86,000. So that's actually very high. You have 600,000 total. We have 86,000 today. That's over my 10% threshold. So if the total number of options is, 500,000, and we have 50,000 options on the day, then that means there's a fair amount of eyes looking at the market, particularly in the options market on that stock. With that being said, what do I see in Netflix? I see about 25% of this roughly 550, 600,000 options rolling off this Friday. That could create a little bit of a headwind for Netflix. But it's not surprising that you have all these short-dated options expiring because we have earnings coming up. And I think according to the Benzinga calendar, let's put that in there. This is the best earnings calendar. Netflix is tomorrow after the close. So I think we're going to see a lot of these options that are expiring start to be monetized probably before earnings or on Wednesday after earnings. It's going to create a lot of volatility Tuesday, Wednesday, Thursday, and then you'll probably see Netflix pull back a little bit into the close. What do I think is happening with Netflix in terms of right now? Do I see it as bullish or bearish? I see there's a little bit of a resistance area from an options perspective around 630, but structurally it looks, I don't see it breaking this corrective structure here until earnings. I don't see it, and then I see it breaking past that. If the earnings are really good, this thing has scope to probably run about 660, which would be about another 5% on this. So maybe 680 if you get a really gangster number. I would think it's unlikely that we could hit 700. It would just have to be an exceptional number for us to hit 700. So I think if we break this structure, I think your top side resistance is probably right around here. So that would be right around here. And if we're lucky, you can maybe make it to 680, which would be almost a 10% move. If it breaks to the downside, where do I see support? 600. I think 600, you're going to have a strong buying interest. There's a lot of option positioning there. That's 600. It's where this recent launch into the corrective structure, this impulsive move into the corrective structure happened. So there was, and you can see this is the biggest volume tick of this entire chart since September 20th. So in the last month, the biggest volume day was this day. And that was an impulsive launch off of 600. And since then, we haven't gone anywhere. So this favors upside moves. But if it gets back to 600, I'm a very happy buyer at that point, because to me, 600 would be a cheap price for a nice medium-term, long-term play, without a doubt.
So I'm going to hijack the screen for a second. I'm going to make this a little tangible. This is a Netflix call that expires this Friday. $635 strike price. I actually got into this morning when Netflix was in the red, kind of down here. It was down about 0.5%. And kind of my thesis was, hey, look, I think we're going to see some buyers come in before earnings. And the stock's been strong since I got in this contract. So again, I got in this morning. The contract right now is up 21%, up about $323. Chris, I'm not going to ask you, I'm not going to ask you to tell me what to do, but maybe if you were me, would you have the, let's say, testicular fortitude to hold on to this call through earnings? Or would you go ahead, maybe hold it to tomorrow to see if it's up tomorrow before earnings and then sell it if it's up again? Or
okay. Sure. So let me take a look at the, let me see if I can pop this chart out on Thinkorswim. Yeah, we can. Okay. So here we go. This is Thinkorswim's daily chart. And this is the IV right now, implied volatility at 0.35 and the historicals at 0.26. So there's a dislocation. 83 to 85% of the time, IV is more elevated than actual historical. So, there's a decent dislocation of about 9 points. That's about a third. So there's about 30%, 33% dislocation between IV and historical. So generally you want to be long gamma or just long calls when two things are happening. One, you're bullish, very bullish on the stock. And two, that the premium's cheap. So that would mean that, implied volatility and historical, you want them to be as close as possible because normally there's a decent spread between them. And if the IV is higher, then that means the premium or the cost of those calls is more expensive. If they're about even, then that means that the premium is relatively cheap on those particular options or calls. That's the most favorable time to be long calls. Is the market's really bullish and it hasn't really launched yet, and there's a good closeness between IV and historical. We do see a little bit of a separation. It's not huge. When I look at the IV right now, the October 22nd calls at the money, the 630s are about 67%. And, the 635s are about the same. So it's not expensive. You paid a little bit of decent premium for this, but nothing crazy. Now, why would this trade? So you got, let's see here. Can I look at your trade real quick so I can see the details on it?
Yep.
Okay, so what did you buy? What was the strike?
635.
635. Okay, so you're basically long pretty much at the money calls. And how much did you pay for them? You paid...
I paid $1,500 was the cost. Current market value $1,785. Okay. So yeah, up about 20% right now. But again, I'm okay with holding on to this overnight. And then if the stock's up, trading up tomorrow into earnings, then I might say, all right, I'm fine with a 30-40% gain. I don't need to hold this into earnings and potentially lose all those profits and potentially go into the red on the trade. So I'm undecided on what to do with this right now.
Okay, so there's a couple things in terms of how I play it. One, if I wasn't in this option, and I do think, and let's say I was of the opinion that Netflix is probably going to break out of this corrective structure, and let's say it's going to be a pretty decent rip. Well, right now, at the money calls and puts are priced at about $17, $18 right now. You could potentially get long a straddle and take the volatility on both sides. You would basically need that to move $30 in each, $32 in each direction for that to start to make money. Do I think Netflix has the capacity to do 30? Yeah, but I think beyond that, it starts to stretch. Like it's going to need to be a gangster earnings for this to move, $50, $60, $70. The last earnings, if I remember correctly, it didn't really have a big move. This one, good earnings, and it fell to the downside. So we haven't had an earnings post this corrective structure, and that's going to obviously have an effect upon it. I think here's what I'm thinking right now. If I'm long calls like you, if I get to the top of this 639, say today, I would probably be interested in closing that because why? You're going to lose about 236 in premium just by holding it overnight. So you have to think about it right now. You're up about $2, $2.50. But if the market stays exactly where it is, just the theta decay, you're now at break even tomorrow, which means you need to again gain even more for that to become valuable and make money again. So I think if Netflix can rip to 637, 638, 639, I personally would be closing that out.
You're saying this
ahead
afternoon?
Of earnings. Yeah, before the market closes. Otherwise, you're going to eat roughly 234 in theta decay.
And then I'm banking on Netflix needing to be up 2% or something tomorrow to make up for that theta decay.
Yeah, so they are, if I remember, they are after close. So correct. You would have to hold then just to get the earnings boost. You would have to hold through earnings to get that earnings boost. And again, tomorrow you're going to eat another 250 probably in theta decay, and then you have to close it out on Wednesday. So if you hold through earnings, you're going to eat about $5 in theta decay. And right now, if it doesn't move anywhere, that's going to put you in the negative. So there's a risk on this. You've already made 250 on it. I would say if you don't have an immense amount of confidence that this is going to rip higher, then I would just close it out as you get to the upper end of this range here.
The only other problem that I've failed to mention is that I don't have enough money in my account to, surpass the pattern day trader rules or whatever.
Right.
So if I close this position that I opened today, I think I'll be marked as a pattern day trader on Robinhood and be restricted for a while, but maybe it'd be worth doing so I don't potentially lose this whole $1,700,
Yeah, well, okay. That's the tricky thing about it. So that puts in a totally new calculus because that's something I didn't think of before.
I know that's a whole nother factor that shouldn't be in play, but I can do it. You have I think 4 or 5 day trades you're allowed to make in a 10-day period, which this will not put me at the cap. It will just restrict me from making another day trade in the next 60 days or so, which is fine. I'm willing to do that. I typically don't day trade, so it's not a big deal.
Yeah, I mean, yeah, if you typically don't day trade, it's not as much of an issue. You'd have to make the calculus at this point, which is, okay, if I am restricted for 60 days, would the gains that I make from taking this trade and closing it out, which is what, 250 credit or whatever it is, would that be offset by potential future trades I cannot take because of the day trading restriction? That's the calculus you have to really make. So if you could, in the next, few months, he's going to close it right now. So he's closing it right in front of us. So yeah, I mean, if you don't feel like it's going to make that much of a difference and you're not really day trading a whole lot, then I don't see it as an issue.
No, I put a crazy ask in there to see when I submit to close it, if it's going to tell me,
clever idea.
What
clever.
Oh no, it didn't tell me anything. All right, so maybe I'm not. Let's see. I know I did something. Where's my Robinhood? I don't know. Okay. We removed. So earlier they had me as a pattern day trader and I asked them to remove it and they did, but they said they'll only do this one time. So who knows? Either way, the end goal is to try to get over that $25,000 mark so that I can day trade without having to worry about that. But I'm going to go ahead and, well, honestly, if that feels
you got to talk to your boss, Steve, to give you a raise.
Yeah, we'll see.
Say, hey, I need a raise because I got to get over the pattern of the PDT rule. Need some help, buddy.
So Chris, we do only have a few minutes left. So I want to know what else you're looking at in terms of option flow. I see Peabody up there, Affirm,
Snap.
APPS. Oh, Snap. Yeah. Snap reports.
Yeah, Snap and we'll do IWM. So I actually I think it was on Friday, I sold the 78.81 bear call spread, which means that I was expecting this to not break above 78 and I'm expecting it to fade. And the reason being on that is that Snap last week had a bullet of options rolling off, and this weekend or this Friday they have another 22% of the options rolling off. And so I look at it as I don't see Snap getting over this hurdle, and it started the week very favorable. So last week it tried to close below it, opens, sells off big time, and you see there's a lot of volume there. That's a lot of people taking profit. That's a lot of people selling. That's a lot of people caught in that false break. The biggest volume spike so far has been the false break above 78. So we sold that on Friday so we could capture Friday, Saturday, Sunday theta decay. And then now we have it on Monday. And Snap has earnings, according to your calendar, on Thursday. I think it is after market. So right before the market closes on Thursday, we'll just close it out and capture, 90+% of the profit. I'm bearish on Snap. If Snap correctively, if you're not already in Snap, if Snap correctively, chops up and gets up to 77, 78, I would consider a sell order in that. I think that's a pretty decent sell order. You could even sell another bear call spread. You'd want to be out before options. Meanwhile, I like a buy on Snap between 71.5 and 69.9. I think Snap is a great buy at that price. So that's what I'm looking at Snap. IWMs, I don't think we're going to break out the corrective structure this week. I don't see it from an options positioning. We're only mildly negative gamma. It's not like a huge amount of negative gamma. So for those of you who don't know, Negative gamma refers to the net options positioning. And if the market is more net short options than they are long options, it's net short, that's negative gamma. If the market is net long options, that's positive gamma. And that matters because statistically, when we're in positive gamma environments, there's less volatility, more mean reversion. When we're in more negative gamma environments, there's more volatility in both directions. That's what was happening with SPY and SPX. Once we got to here, we shifted into negative gamma. And look at the moves in SPYs, kind of tame, kind of weak. We hit negative gamma, boom, big volatility, big volatility. So as I've been telling my members for weeks now, we got negative gamma environment in SPX. As long as we're below 440 or 4,400 in SPX, we're bearish. Once we got above that, it's been bullish since. So that's kind of, with going back to IWM, it's only a mild amount of negative gamma. So the volatility isn't, the structure of the order flow, the architecture order flow is not there for big pushes unless we get a new catalyst. So I think IB stays inside this 232, 233 resistance and 210, 218 support for at least the rest of this week. So I wouldn't bet on the breakout this week. And one other thing I like to mention, about the power of options. So this is the COVID, when the COVID crash started. What do you guys notice about this date? This is a weekly candle, February 18th. Does anything come to mind in terms of options there? How about you, AB? Can you think of anything?
February 18th of 20. I mean, is that just a big date that options roll off on?
That was the third week. It was the monthly OPEX in February.
Okay.
And so a lot of positions had unwound, a lot of long positions, and it took away the floor of the markets. Now look at where this week was the 16th. It ended on the 22nd, 23rd, or whatever it was. This was the bottom. What was this? The end of that Friday was the monthly OPEX for March. And it was well known that BlackRock had a large put position in the market. And they closed it out after this week, and go figure, the market starts to rally. This is the power of options. When you start to look at some of the biggest sell-offs and the biggest buy-ups of these rallies, they're happening around inflection points for option expiries. Monthly OPEX for February, monthly OPEX for March. I don't think that's a coincidence. I think it's actually highly explainable that options were, and changing of option position is huge. Now, if you want to go back to SPY real quick, SPY was in negative gamma territory once we started getting to here. You see the volatility picks up. What were the most common options that people were buying during this period? Puts. And so what happens towards the monthly OPEX as we start to get towards Friday? Those put decays were, put decay is stronger than call decay. Put decay started to increase, people monetizing those puts, getting out of those puts. And how do we end the week? A strong rally, because all those puts are being monetized and decayed. So we get a strong rally in the market. That's really one of the major catalysts. You had the infrastructure, which helped, that kind of like took the risk out of the markets. And then once they felt like the all clear is, let's get rid of all these puts, put decay is out, creates a nice rally in equities. And now we've kind of cleared the first hurdle. And to me, that that shows signs of bullishness right now. We shifted into positive gamma territory to close last week. So that's kind of what I think is what's happening in the markets right now. And don't underestimate the power of options. They signify a lot in terms of flows.
Got it. It's real quick, going back to Snap. You said you were bullish in the short term and medium term, or?
No, I'm short term bearish right now.
Okay.
And so we sold the bear call spread at 78.81. So we sold these calls here and we bought these calls here. That's a bearish play. Selling a bear call spread is a bearish play. It means that the premium was good. It was right at the price when we sold it. Actually, we sold it here, which was Friday. And we felt like, hey, Snap may get up to 79.80, but it's not going to crack 81. And we believe that Snap is going to, with all these options rolling off this Friday, that Monday we would see a pullback in Snap. That's exactly what's happened so far. Snap dropped, $6 within the first 3 hours of trading. I don't think that's a coincidence. The option board was cleared, a huge amount of options off the board that took out the fuel of the market. It pulls back. So short term, I am bearish on Snap till earnings. After that, anybody's guess. But if Snap gets down to 72, 71, 70, I think it's a great buy at that point. I think it's an excellent buy. I will personally get long at that point.
We see Rich Kaiser in the chat saying a different way to look at the market. I like it. I think it's very, a lot of traders do not take the time to kind of go into this data, into the option flow, into the market structure. But as you said, Chris, it's one of the best ways to look at the market, to have a good sense of where things are going. So thank you for coming on today. We will be back next Monday. Although I will follow up with you, and we'll figure out a good way to have you on moving forward, as we're not doing Get Technical on Mondays as of right now. But thank you again, Chris, for coming on. I'm going to go ahead and drop the link to Second Skies Trading in the chat again. So if you have not checked that out, please go do so.
Appreciate it. Good seeing you, and I will see you all next week.
Beautiful. All right, Chris, have a good one.
Hey, I'm back.
What is up, Spencer? How we doing?
Good. We got to hop off because Mooner Bus is going live right now. I would love to get some feedback from the chat on what they had thought of this. We're thinking of extending the middle of the day show, maybe even as early as 11 a.m. to 2, and doing just one long 3-hour stream. Let us know what you think in the chat. You like it, you hate it, well, whatever. But thanks to Chris, thanks to Jake, thanks to Matt, thanks to everyone who came on the show today. I forgot about Ed. Thanks to Ed. And before we go, we just want to do a quick check at the heat map again. How we doing? Looks about the same as it did a couple hours ago. Nothing's really changed.
Look at Dogecoin up more than 7%, outperforming a lot of those other altcoins.
Dogecoin's gone down though. Dogecoin's gone down.
I know it hasn't been doing well, but I'm saying in the last 24 hours, up more than 7%. Compare that to Solana, Litecoin, Cardano, all these other altcoins is actually, showing a little bit of strength. So who knows?
They're going to talk way more about this on Mooner Bust coming up next. We're talking about the Bitcoin ETF. As a reminder, you can get Bitcoin, $50 of Bitcoin for free. All you have to do is download the Voyager app, fund your account with $100, use the offer code ZING, and make your first trade, and they will give you $50 in Bitcoin for free. Free. That spells free. Smash that like button for us, please, and thank you. How many likes we got? Not enough is the answer. We're at 100 some odd. Not even 100. Oh my gosh, get us to 100 people, please. The Mooner Bus guys are going to be very angry. Now they won't know.
All right, well, without further ado, Spence, let's go ahead and get over to Mooner Bus. This stream will automatically redirect you, so you do not need to go anywhere. Spencer, I'll see you tomorrow.
That's the plan.